Good evening. A warm welcome to everyone to the first session of our exclusive webinar series, Let's Talk ETFs. I am Nishant Agarwal, Senior Vice President at Kotak Securities, and joining me today is our speaker, Mr. Nilesh Shah. Nilesh
Hi,
is the
Nishant.
Group President. Hi, Nilesh. Nilesh is the Group President and Managing Director of Kotak Mahindra Asset Management Company Limited. He has over 30 years of experience in capital markets, having worked with ICICI Group, Axis Bank Group, and Franklin Templeton. He has been part of the teams that received the Best Fund House of the Year award at Franklin Templeton, ICICI Prudential, and at Kotak Mutual Fund. Nilesh is also a board member of AMFI and a member of SEBI's COBOSAC committee. He is also a part-time member of the Economic Advisory Council to the Prime Minister. Welcome, Nilesh.
Thank you, Nishant. It's my pleasure to be here.
Just setting a context, ETFs or exchange traded funds have gained significant traction of late among investors, and the past year saw heavy inflows into ETFs. The interest in ETFs has risen sharply since March 2020 across the world, with retail investors across the globe using them as tools of investing in the market rebound during the pandemic. In today's session, Nilesh will give us a 360-degree view of ETFs that will help you get more clarity on them. Before we commence the proceedings, I would like to remind our audience to keep your video quality on HD so that you may have better visibility. Also, we will be opening up for Q&A at the end of our session, so please feel free to share your questions in the comment section. So, Nilesh, before we jump into ETFs, I would like to utilize your presence to understand your thoughts on the current markets and the future outlook.
So, Nishant, if we look at current market situation, economically, India is oasis in the desert. Globally, there is a massive sandstorm blowing, and when it will pass through oasis, some dust will get deposited. For sometimes there will be darkness as the sun will be covered with the sand. But once the sandstorm passes, people will realize that here is an oasis. Compared to our peer group, we are good in terms of inflation, monsoon, growth, investments. Our only worry is external sector. Trade deficit is high. Rupee has appreciated against yen, euro, and GBP, and that will put further pressure on trade deficit. So there is a need to manage external sector well for economy to do well. Market discounts almost all the positives at current valuation. We are today trading at a massive premium to our peer group. It's not that we have gone up on valuation, they have fallen down on valuation. So we believe this is a market where oil, inflation, Russia, Ukraine, US interest rates, etc., will continue to create volatility. But if you are a long term investor who will buy on dips, you will eventually make money. Brace for volatility, buy on dips. This will be the best strategy in today's market.
Got it. Got it. So, just taking a cue on the idea of long-term investing and buying on dips, how should a retail investor navigate the markets currently?
So, one, if you are an investor, please follow the dharma of asset allocation. This is not the market where I will recommend a large trading position or a leveraged position. If you want to trade, please follow it with a very strict stop loss policy. Please minimize your overnight positions. Please minimize your leverage. Try to be in good quality companies where businesses and valuations are reasonable. And if you can do SIP in mutual fund, that will be appropriate way of investing. If you are direct stock picker, please stay with companies where governance standards are good, because going forward, companies with good governance will be rewarded. Companies with bad governance will get punished.
Got it. Got it. Stay long, minimize overnight, stay with good companies. I think that makes a lot of sense. Uh, just wanted to understand on some of the other asset classes like debt or gold. What would be your view on these asset classes? Do they look attractive now, or uh, how would you place them?
So, gold has been an enigma. In fact, without the 16% import duty, which has inflated India's rupee gold prices, the gold returns will look fairly poor. Thanks to 16% taxes, rupee gold prices have given extra return. Normally, when US interest rate rises, gold prices kind of fall, and that is exactly getting repeated right now. So, my recommendation is that please don't, you know, look to invest in gold at this point of time, unless you need to invest in gold from an asset allocation point of view. If you are investing in gold, Nishant bhai, one thing which people should remember, most of us will go and buy gold on Akshay Tritiya day, on daughter's birthday, on Dhanteras day, and most of us will buy 5 gram, 10 gram, 15 gram, 50-gram gold. When you buy gold in such small denomination, you end up paying 30-40% premium. 100 रुपए का गोल्ड आप 130-140 रुपए में लेते हैं, एंड ऑन टॉप ऑफ इट देयर इज 16% टैक्स. सो इफेक्टिवली 150 रुपए का सोना आप खरीदते हैं और 100 रुपए की वैल्यू लेके घर पे आते हैं. You have 33 to 40% loss at the time of investment in gold. Please don't make that mistake. Please come to buy gold ETF. आपकी transaction cost होगी 0.5% or 1%. And that also I'm talking on the higher side. Nishant bhai, you know it better. It might be even less. So instead of buying physical gold in smaller denomination, please buy gold ETF that will give you instantly 30 to 40% more return or protection compared to physical gold.
Wow, that's a great advice. Given the season coming up, I think this makes a lot of sense. Uh, so, if I were to take our topic at hand and move on to looking at ETFs overall, so the way you said about gold ETF, now generalizing it on the overall ETF segment itself, how should one go about investing in ETFs? A lot of people would like to know about what ETFs are, how does it work, and how should one go about investing into it. So, would you be able to guide us on that?
Sure. So ETF in simple sense is index fund which are trading on the floor of exchange. What is index fund? It is a passive fund where fund manager replicates an index. So for example, if I launch Nifty index fund, I don't take any active call to be overweight Reliance or underweight XYZ stock. I invest exactly according to the Nifty index. Now, Nifty index is available for buying or selling only at the closing index. But Nishant bhai, you know कि दिन में ऊपर नीचे तो होता रहता है.
Yes.
ETF is that index fund whose NAV will move in line with the market movement. You
Oh,
can buy ETF at 9:30 in the morning also and 2 o'clock in the afternoon also. So ETFs are index funds which are traded on exchange and are reflecting intraday movement of exchange or intraday movement of index. Why should you buy ETF? One, because it gives you exposure to the index. There is no fund manager involvement. Second, most of the ETFs charges very, very low expenses compared to an active fund as there is no fund manager involvement. Third, ETFs are available on the exchange. So you can call up your broker and buy when you believe market has fallen. You don't have to wait for the day end NAV to invest into the ETF. So it's convenience, it's low cost, and it's replication of index without fund managers involvement. These are the unique advantages of ETF.
got it. So, ETFs seem to be very similar to stocks in terms of purchase or the trading mechanism on the stock exchange and the benefits of an index fund given the real time movement. So, ETFs sound really interesting as compared to the other funds. But just wanted to understand more details like what kind of investment strategy would you suggest? Would it be more like an SIP strategy or a lump sum strategy that one should adopt for investing into ETFs?
So Nishan bhai, our preferred strategy is always systematic investment plan. There are three rules of wealth creation: regular investment, बूंद बूंद से सागर बनता है, little drops of water make an ocean. Second, long term investment, you have to wait for good things in life. And third, asset allocation or disciplined investment, diversify yourself, don't put all eggs in one basket. With those three caveats, SIP is the most preferred way of investing in ETF. But many a times people get money on lump sum, for example, retirement, for example, gift, for example, some occasion like wedding. In that scenario, I will recommend you invest via what is known as systematic transfer plan. Instead of putting lump sum, take 3, 4, 6, 10 installments and invest it over next 3, 6 months. That way you will be able to average into the market. कई बार निवेशक को क्या होता है, आज मैंने पैसा लगाया, कल मार्केट चला गया, दिल खट्टा हो गया, ओ मैंने एक दिन रुक के पैसा लगाया तो लॉस नहीं होता. अब आप बंबई सेंट्रल से गाड़ी में बैठते हैं सूरत जाने के लिए, डू यू बॉदर कि कोई लोकल ट्रेन मेरे से पहले अंधेरी पहुंच गई? नहीं भाई, आपको तो सूरत जाना है, सूरत वाली गाड़ी में बैठे रहिए. बट दिल खट्टा हो जाता है. दैट्स व्हाई दिस एसटीपी विल वर्क वेरी वेल.
Makes sense. Makes sense. Uh, if I have to look at different types of ETFs, if you can elaborate on what are the different types of ETFs and what ETFs one should look after, that would be helpful.
सो निशांत भाई, अब ईटीएफ में बहुत सारी चॉइसेस अवेलेबल हो गई है. पहले खाली इक्विटी ईटीएफ, सबसे पहला ईटीएफ जो भारत में लॉन्च हुआ, इफ आई रिमेम्बर करेक्टली, वो बेंचमार्क ने गोल्ड ईटीएफ लॉन्च किया था. अब आपके पास इक्विटी ईटीएफ है, डेट ईटीएफ है और कमोडिटी ईटीएफ है. कमोडिटीज में गोल्ड ईटीएफ है, सिल्वर ईटीएफ है. मैं सारे निवेशकों को फिर से रिक्वेस्ट करूंगा कि छोटे डिनोमिनेशन में गोल्ड खरीदने की जगह पे अगर आप गोल्ड ईटीएफ खरीदेंगे तो आपको ज्यादा फायदा होगा. सेकंड थिंग इज डेट ईटीएफ. इसमें आपको टारगेट मेच्योरिटी टाइप की प्रोडक्ट्स है, 2030, 2035, 2040. अलग अलग समय काल के लिए you have different instruments available. You can lock yourself in over there. The most popular in the market is equity ETFs, and there we have simple index ETFs like Nifty, Sensex, Nifty 100, Nifty 150, Nifty 500. Then we have something known as sectoral index, FMCG index, consumer index, technology index, bank index. And then we have something known as smart beta indices where we run algos to create index, NV20, momentum index, volatility index. So you have a whole range of choice available in ETFs. If you are an average investor with limited knowledge, please stick to index ETFs like Nifty, Sensex, Nifty 100. If you are informed investor who can take a sectoral view, then you can come to sectoral index. Last year technology was doing well. This year banks may do well. So you can pick up based on your sectoral view. And then if you also want to take view on certain algos, certain
Hmm.
characteristics like volatility, like momentum, you can go to those kind of smart beta indices. So you have complete range available: debt, commodity, pure equity indices, smart beta indices, sectoral indices. Choose what you are comfortable with.
So ETFs, long range of options available, but for the average investor, not the savvy investor, stick with the basics, equity.
Absolutely.
Uh, okay. I just wanted to understand one thing. So when you talk about index funds, Nifty 50, Nifty 150, etc., lot of AMCs or every AMC will have this a Nifty ETF. So how will one go deciding that which ETF to invest in?
So, Nishant bhai, normally tracking error is the way to look at whether this ETF is good, bad, ugly. Higher the tracking error, that means वो fund manager उसको replicate नहीं कर पा रहा है. Lower the tracking error, that means fund is hugging the index, which is what you want. So the fund with lower tracking error is one where you should be looking to invest into. Now many a times investor will say किसके पास वक्त है tracking error देखने के लिए. In that case, stick with 4 5 brands which you are comfortable with. I hope and pray Kotak brand is one where you will be comfortable.
Yeah, got it. So stick to known brands if possible. Look at the tracking error, and tracking error is more like कितना replicate कर रहा है index को underlying
Absolutely.
पे. Whatever big difference means ठीक से नहीं कर रहा है. Low difference is the best one to choose for. Makes sense. Uh, so everything looks great about ETFs. Uh, why do still people go majorly do investments in mutual funds? Uh, this is something which we didn't understand. So if you can help us.
So ETFs are also mutual fund only. But in
Mhm.
mutual fund, you have what is known as passive funds, which includes exchange traded funds and index funds, and what is known as active funds. Now, I was just looking at our equity funds performance. Across most of the time period, we have added value to our investors. We have given more return to our investors by outperforming benchmark index. So if you invest in, let's say, Nifty 50 index, vis-a-vis something like Kotak Blue Chip Fund, our fund has outperformed benchmark index, and hence it makes sense for investors to invest with Kotak Blue Chip rather than Nifty 50. Today, lot of investment flows into active fund because people believe fund manager will outperform benchmark indices. They will give more return than the index per se. There are some investors who believe that, I don't want to be hostage to the fund manager's ability to outperform index. So let me go into index which I am comfortable with. At least there, I don't depend upon an individual. So different people, different need. Choose what is comfortable to you.
Got it. And from a cost perspective, the expense ratios would be slightly higher for mutual funds, as
Yes.
you indicate.
So in active funds, regular plan expense ratios will be higher than ETFs. But there are many active funds where direct plan expense ratio is equivalent to ETFs. So while you do have to look at the cost of managing your money, because cost does make a difference on return, but please remember that if there is a value add, then don't ignore it. I may charge 2% expense ratios, but if I am adding 2% alpha or value add over benchmark index, it is worth it. You have to look at what you are getting, not what I am making. I am not a
Mm-hmm.
charitable organization. I price my services which creates win-win for customer as well as myself. So do keep a watch on the cost. It is important. But most important thing for you is the value add which you are getting from the fund manager. If there is positive value add, go to active funds. If not, go to passive funds.
Got it. Got it. Got it. Uh, if, as you mentioned earlier, ETFs are also MFs. From a taxation or from a risk perspective, how would it be different? Would it be different from the other mutual funds, or it would behave in a very similar way?
It is exactly like a stock. You hold for less than 1 year, it is short term capital gain. You hold for more than 1 year, it is long term capital gain. You pay STT while trading on ETF on stocks, you pay STT while trading on ETF. So it is exactly like a stock. Equity ETFs have 1 year for short term, long term. Debt ETFs have 3 years for short term, long term.
Okay, got it. Got it. Got it. Uh, So, from a diversification perspective, do you do you think is there a way to like matlab, should I put it in multiple ETFs as a strategy from a diversification perspective, or from an overall asset allocation perspective, ETF could be one of the classes that I enter into. How does one do the asset allocation part?
So, it's always prudent not to put all eggs in one basket, but at the same time, don't put too many eggs in a basket. Otherwise, basket will break. So, if you are going in ETF, it can be far more concentrate vis-a-vis, let's say, active fund, because index is going to be index only. Whether you buy Kotak's Nifty 50 index fund, ETF fund, or someone else's, we are all going to replicate Nifty index only. The tracking error will vary marginally here to there. So when you are investing in index fund stroke ETF, maybe two or three companies, two or three mutual funds is good enough. When you are investing in active funds, then probably five or six will be necessary.
Got it. Got it. This is very, very interesting. Uh, what I'll do, Nilesh, is I we have a few questions from the audience which have come up. So let me just bring it up. Uh, First question that I see is how do you compare and contrast between traditional mutual funds and ETFs? I think, yeah.
So traditional mutual funds are available at the day end NAV. ETFs are available throughout the day, and generally they will reflect intraday movement of the market. Other than this, everything else remains virtually the same, except minor differences. Like for ETF, you require demat account. For mutual funds, even if you don't have demat account, it's fine. Normal mutual fund you buy from outside the floor of exchange, which is directly on our website through your mutual fund distributor. Whereas ETFs, by default, you have to buy on the floor of the exchange through your broker. So, bearing such minor differences like floor of exchange, demat, the only major difference is that mutual funds are available at day end net asset value. ETFs are available round the corner.
Yeah, makes sense. So ETFs are like stocks, as you already mentioned. Day end का issue नहीं है. Redemption liquidity comes faster as compared to the traditional MFs, and plus the cost factor you already mentioned if the fund manager is not directly involved. Uh, the other question, an interesting question that has come up is investing in international stocks via global ETFs a right strategy in the current market situation?
Very tough question. Why will I invest in global funds? One, it gives me geographical diversification. Tomorrow, if there is a natural calamity in India, my investment outside of India will be safe. Tomorrow, if there is a war with Pakistan or China, my investment outside of India will be safe. So, to that extent, yes, investing offshore gives you geographical diversification. The second one is business diversification. There are many businesses which aren't available in India for investment purpose. For example, we can't invest in a business model like Facebook or Tesla or Amazon or Apple or Microsoft. Those are available only in US market. So your desire to invest in external fund, offshore fund, is either geographical diversification or business diversification. Now, if you want to do 10 to 15% of portfolio into offshore investments, that's fine. Should not be something to worry about. Uh, Investments via ETF is far better because then there is a predictability as to where your monies are going. In India, we have local knowledge, we have local news and updates. But if we are investing in, let's say, country like US or Britain, we won't be up to date with information. And when there is market volatility, it is far better to invest in index fund, which will give you confidence to hold rather than redeem when the fund performance goes down. So do invest in global ETFs, index funds, between 10 to 15% of portfolio to get geographical diversification and business diversification.
Geographic diversification and business diversification are the key factors that should guide the decision towards global investing. Uh, Interesting. Uh, the last question that we have from the audience is on what are the aspects to look at while selecting an ETF?
Tracking error, and tracking error. You invest in ETF because that fund hugs index, replicates index efficiently. Lower the tracking error, better for you. Higher the tracking error, worse for you. So you just have to look at the tracking error. That's it.
Got it. Got it. Uh, Nilesh, just to summarize what I've understood and just to give the context back to the whole group, ETFs and MFs have their own place. Passive versus active, uh, people who want to take the benefit of movement of the market, take the benefit of the redemption factor, and do not rely on the fund manager. Uh, ETFs could be a good way. And for good active MFs, if they're beating the benchmark numbers, then that could be one other way of looking at the MF strategy. Uh, if I look at in terms of selection, diversification is very important. Asset allocation is very important, and selection of ETF should be basis majorly basis looking at the tracking error and having a good understanding on it. Uh, Anything else we would like to add, Nilesh, on this?
So, Nishant, by whether it's ETF, whether it's mutual fund, whether it's direct stocks, please remember three things: regular investment, little drops of water make an ocean; long term investment, you cannot grow a mango tree unless until you wait for 12 years. And third, diversification, discipline, asset allocation. Don't put all eggs in one basket. If you manage these three things in your direct stocks or mutual funds or ETFs, they are likely to provide you financial freedom.
Got it. Uh, I think we have been able to cover our topic fairly well. And thank you, Nilesh, for your insights on ETFs. And I'm sure our audience has got a very good understanding of this financial instrument. Uh, I would just like to take a minute to give the audience an understanding. If you want to invest in ETFs and diversify your portfolio, Kotak Securities has multiple ETFs available for you. You can just log into your account and you can look at the ETF preset watch list and check them out. Or you can go to the more section and click on ETFs to know more about ETFs. Uh, uh, Sir, I would like to conclude the session on this note and would like to thank everyone for joining. And we hope to see you in the next session of the ETF webinar series soon.
Thank you.
Thank you.